So guys, shall we start? I think, yeah, we should start now. So I think the next topic, which is similar to the BCG matrices, which we discussed in the last session about, you could say, strategy of the company for a product, starting from their question mark stage to cash cow to star and to dog. I hope so. This phenomena is clear to everyone, which is based on the market share and market growth. Clear, guys? I hope so. This topic is clear to everyone. Yeah, thank you, Anubhav. So now the next topic, which is again the, you could say, one of the strategy to actually work out on your, you could say, strategies of the company. But this particular matrices are giving you much more broader understanding and broader perspective of the company. Broader perspective, and I'm just talking right now because in the BCG matrices, we have only two factors to analyze, that is business growth and market share. But here we have some, you could say, other parameters which is to be considered, which we may say it's a limitation of the, you could say, BCG matrices that is being rectified under general electric, you could say, GE matrices. Okay, these parameters includes your industry attractiveness, which includes market growth, industry profitability, size of the company, pricing practices, and other opportunities and the threats. Okay, this is basically what about the industry attractiveness. Second point is your business strength, that is called competitive position, which includes your market share, technological position, profitability, size, among possible strengths and weaknesses. Try to understand, guys, because previously we are making the things more binary in understanding, but now, as per the G matrices, things are more practical and more, we can say, uh, you could say dynamic when it's come to understanding level. Now, what exactly this G matrix is all about? If you can see this diagram right now, when we discuss about this G matrices, it is again been divided on industry attractiveness. In the previous one, we have only low and high, but we have some medium as well. Okay. Similarly, business strength or competition is strong and weak only, but we have the average as well. Now, according to that, we can categorize the company's product. We can categorize the company's, you can say, any particular service or business strength, or we can say business standing. Now, for example, if I'm just talking right now, a particular company who having strong business strength but low industry attractiveness. Business strength is strong and low company industry attractiveness. That company are profit producer. Why industry attractiveness is no, even though the company is earning the profit? Because in the competition, the company is basically doing really fantastic. But if your business competitiveness is basically average and industry attractiveness is low, somehow you have higher cost in comparison with your profits. Okay, so you can see that over here. The profitability is only this much, but cost of the company is very, very high. I'll just type this. See, this is basically what about your cost, and this is basically what about your profits. Once you will move to the lower industry attractiveness and weak competitive position, you definitely have a negative perspective from both. And these industries basically called the losers. Definitely it was a loser, but important thing is that comparatively, company would be in the severe loss. This is a stage where the company, this is dog stage we can say in the BCG matrices. Okay, this is basically the dog stage where the company have to upskill themselves or they have to, you could say, withdraw from the market. That is basically called your weak company, weak business strength and low industry attractiveness. If I just move to this one, because see guys, this is, if you can see this name right now is mentioned, winner means why? Because these companies having very good amount of profit because their strength is good and their industry attractiveness. These are basically the market leaders, comparatively market followers, question mark stage. Because weak business strength, the company is new in the market, the product is new in the market, but industry potential is very, very high. Yesterday we discussed about the example of Nika. We discussed the example of Apple. Okay, we discussed the example of online platform like Byju's. Okay, so these are the basic example I'm just talking right now. When the product is new, you are in the question mark stage. Here, again, you can see that average business, these are again the winners stage. Because try to understand, guys, this A, B, and E are the position where the company is having very good profitability. Because these three stage are companies either leader or follower, or we can say top three companies in the market. A, B, E. Average business, medium industry attendance, where the company is basically moderately doing good in the market. And loser, why loser? Because industry attractiveness is very medium, but still the company is earning profit. Still the company is earning. You can see that this particular the pie chart which is being mentioned over here, this pie chart will basically guide you about what about the company's profitability. I hope so, guys, because we discussed the BCG matrix in the last session. Hanji. Any doubt to anyone, please? Because this is similar to BCG only. If you understood BCG, G would be very simple for you. Okay. Sure, guys. I'll repeat it one more time. Okay. So, guys, try to understand because in the previous set as well, in the BCG matrices, we discussed business growth and competitive position. Okay. Similarly, the stays are same, but here we are making it more because in the previous one it was strong and weak only, but now we have strong, moderate, and weak. Same industry attractiveness we have. That is about the low, average, and weak, low, medium, and high. Now, first of all, what is industry attractiveness? In the potential, it's a C basically. Potential of a particular product or the sector or the industry in the market. Okay, like for example, if in India, if you talk about, there's a very huge potential when it's come to mobile business or you could say electronic business because of the you could say the amount of or number of people or the population of the country is very very high. So it's basically a very very attractive market for everyone. That is called industry attractiveness. Business strength means where your product stands among the market, what is your product competitive strength. That is called your competitive position of business strength. Now, in this case, if we'll move further, this is basically the different stages where the company being considered as a winner. Top three company, ABE. Top three company, ABE. Question mark, any new product in the company, which might move to winner, might move to loser as well. We discussed in the BCG as well. When it's come to average business, when the company is basically moderately doing good, see guys, because whatever you could say dimensions which we are discussing right now, you can find n number of examples over here. You can find n number of examples over here. Okay, and definitely it depends on the company's profitability situation, competitive strength in the market. Like we talk about Paytm, we talk about iPhone, we talk about Maruti. Different example. Definitely, all these company and company's product may be categorized under any of this particular matrices. I hope so, guys. Now it's clear exactly what the parameters we are discussing right now. Yes. Definitely, Sean. Question mark is for new product always. Whenever the product is launched, definitely you have weak business strength or competitive position because product is new. Customer are not aware. Now the product may move to winner or may move to loser. Depends on the success and acceptance of the people in the market. Clear, guys? Not for old product losing market share and profit to. See, the product is outdated. Basically, they may actually come from winner to average business and average business to loser. Adam. Okay. And Roshan, please kindly don't write anything on the screen. I'm really sorry for that. Please. Okay. I think, Adam, it's clear. I think because that is the basically stage what we simply discuss in the BCG as well. Okay. Sean, not for the old product losing market share. Definitely, that's I think same thing Adam was asking actually because the particular. Let's suppose if I'm talking about. Yes, Sean, please go ahead.
So the question mark stage is both for new products that don't know whether it might be a winner or a loser. And old products, like say Nano, like Tata maybe thought it would be a winner, but ultimately it turned out to be a loser. So does that like Nano look as a question mark or just a new product is a question mark?
See, new product is a question mark. Like when the because we are discussing the Nano when it, in the phase of 15-16 or 14-15, I think so. So at that time the product was in question mark. They, I think, because as per my you could say research or my reading, you could say potential, the Nano was not at all in winner position for the company because it is always a product which is in the loss making for the organization. Okay, so actually it didn't move from question mark to winner. It moved from average business only, or you could say below average as well. Okay, from below average they move to loser and they drop out from the market. Discontinuation of the company to manufacture the product. So, Sean, always remember whenever a particular product which is being launched does not mean that directly they will move to the question mark. But as you know that whenever a particular company is launching any product, it will always actually start, and the company always a very huge focus on launching that product. For example, I'll give a very, very basic example, I think, Sean, over here. Let us suppose a university, IIBM, let us suppose. IIBM launching a very new course in the company, in the university, and because that course is new, you want to promote that because existing course is already running on and very good, going very good. Means you will actually invest a lot when it's come to your marketing as well, when it's come to your promotions as well. That is the product which will come under question mark. University new course. Clear, guys? Yes, definitely, Sean. Yes. Product example, Sean, you, Farheen, I think you need that. See, Farheen, try to understand like the example. Let's suppose if I'm just talking about the Nano example we considered right now. Okay, let's suppose forget about Nano right now. Let's suppose we are discussing about, you could say, the Maggie Pichku. If you remember, Maggie Pichku is one of the product which is being launched by the company, but that was a fail for the company. Okay, that Maggie Pichku was actually initiated by the company, and company invested a lot of, you could say, promotion in that, but that product was not a success at all. It actually was in question mark, move to average and move to loser, and now it is discontinued by the company as well. Fareed. Okay. There are some company, like if I'm talking about the example, like you could say Kia Motors, and we talk about Creta for Hyundai, for example, Baleno for Maruti Suzuki. They started from question mark. Company, like if you do remember, Ranveer Singh was actually doing the promotion for Maruti Suzuki Baleno, and Baleno was a hit for the company. Baleno is only one of the vehicle which is being actually creating the most the profit for the brand like Nexa. That is question mark to winner. And they, because Baleno is in the stage right now of winner only, as of now, even in the market. So in this way, I think Farheen, in this way, you can find out a lot of good examples. I need to explore it. Okay, okay, Farheen. Thank you so much. Any more example you want, Farheen? Sure, sure. Okay. like I can give one more example of Mahindra XUV. XUV 500 was a hit. XUV 300 was a miss, average business, and XUV 700 is still in the position of question mark. And you can see that how intensively the company is promoting XUV 700. It is basically transformation from question mark to winner. Guys, make sure this dark green is all about profitability. Make sure. Highest profit, quarter profit, lower. Loser is basically in the losses section because company may still earn profit because of the sales, but it is not up to the mark. Make sure. Because you understood, guys, BCG would be very simple for you. I think Sean, Adam, Farheen, I hope so. All these examples are clear to you. One more student have asked, I think. Sridevi is clear. Sure. Thank you, guys. Thank you so much. So I think this is a criteria because as you can see that, because I'll just explain what exactly meaning of this plotting of the line. You can see that the plot product line of business units are GE business screen. Follow these 4 steps. The first one, select criteria to rate the industry for each product line or business unit. Assess overall industry attractiveness for each product line or business unit on the scale of 1 to 5. 1 is very unattractive and 5 is attractive. See, basically how we can actually fit a particular product in any of this screen, which particular quadrant it belongs to. Okay. Second thing, what you do, select the key factor needed for success in each product line or business unit. Assess business strength, competitive position for each product line or business unit on a scale of 1 to 5. 1 is very weak, 5 is very strong. I'll give an example, don't worry. Plot each product line or business unit current position on a matrix so that depicted in the figure. This figure I'm talking right now. And plot the firm's future portfolio, assuming that present corporate and business strategies remain unchanged. Is there performance gap between projected and desired portfolio? If so, this gap should serve as a stimulus to seriously review the corporate current missions, objectives, strategy, and policy. I'll definitely take the example of Baleno again, I think so. Okay. For example, just let me type this. Yeah. For example, let's suppose we are talking about the product like Baleno, Maruti Suzuki Baleno, which was, I think, launched in year of 2015. I'm not sure about 15 might be. Okay. First of all, you need to rate the industry of each product line or the product which we are talking right now. Definitely, when you talk about industry attractiveness for the vehicle, and once the Nexa was launched, actually, because Maruti did their rebranding and they open up a different outlet. Under Nexa, they have Baleno, and that is a hit for the company actually. But definitely, Baleno is, you can say, the range starting from 6.9 around to we can say 9 plus 9.5. I think it is the maximum price of Baleno. If we can see that, compare other you could say product in the same range, you will find Kia, you will find Venue, okay, other brands. So definitely when it's come to industry attractiveness, we can give 4 out of 5, for example. Fine, because definitely market is very big when it's come to that range of vehicle. Okay, the range of we can say purchasing of the people in India. Then we talk about the key factors. What is the strength of the product? Definitely because they are competing with Kia Motors, Hyundai, they are competing Mahindra as well. So definitely for that particular reason, if I'm just comparing all the alternative, personally, if I'm talking myself, I'll give it to 4, 3 or 4 we can say, because this vehicle is really fantastic, average wise, maintenance wise. Okay. Now, on the basis of that, we will plot these particular product in either of the quadrant. Okay, I'll put this particular product in the quadrant that is winner's position because company is still earning the profit out of it. I'll show you that, guys. Because still that particular Baleno is in this 3 stage, A, B, or E. It depends because whenever you will just talk about the profitability of the company's profit, major profit is coming from. So it would be either A or B right now. Okay, moving further, you will plot it and ultimately you will analyze it. Because if the let's suppose Baleno belongs to B right now, if the Baleno let's suppose belong to B right now, definitely how we can move to A. If the Baleno belong to E right now, how we can move to A. Now definitely the maturity will come in the market. Maturity like it happened with Maruti Suzuki Swift as well. Now people are not purchasing that much because of the saturation point which comes in the mind of the customer. And companies are like we talk about Tata, Nano, Alto, we talk Maruti Wagoner as well. Because these companies, these are the hit product for the companies, and where they belongs to, we need to analyze on the continuous basis. Because see guys, this is an ongoing process. Okay, and according to that, the company may decide upon whether they have to go or not. Clear guys, I think G Meta is exactly what the scenario is, how we can evaluate, how we can set the examples,